Good afternoon, it's Adil Fazal here, market analyst for CFDs.com, a leading spread betting and CFD brokerage. Be sure to visit the website www.cfds.com to certainly learn and inquire about their products and services. Alternatively, visit the educational website www.cfds.education. Also, there is an app coming out soon, so that should certainly help in terms of sending out information in a more efficient manner. And be sure to keep an eye out for that app. Okay, with regards to European summary, so this is a summary or afternoon update with regards to European markets. Okay, initially we had, in terms of fundamentals, we had the Asian markets higher again overnight, although the Hang Seng was certainly negative. The Shanghai and the Nikkei certainly obviously moving higher overnight. Not substantially. With regards to Nikkei, we certainly seem to be struggling to really thrust higher, given the fact that we've had anti-QE talk with regards to the BOJ, and there is talk about fiscal measures now prior to any additional QE. So that's certainly negative, and that's certainly helping the yen push higher, and obviously that's keeping the Nikkei at bay. In turn, we also have Miss Yellen speaking on the docket today. Now, she has remained silent, and she is going to go ahead with her rate hikes, from my understanding anyway, especially given the fact that the dollar itself technically is set up for a thrust higher. If I just bring up the actual chart of the dollar index, bear with me. I need to get all my charts arranged. Here we go. So we have the daily chart of the dollar index, and you can see here we have held this diagonal trend line support. We have got inside consolidation thus far, but 60-minute chart itself does have several unfilled gaps that need to be closed. Okay, above, so certainly are looking for a potential reversal here, given the fact that we have obviously broken out of this downtrend. You have an unfilled gap here, given the fact that Yellen is talking, and given the situation scenario that I've explained thus far. Okay, the economic data out of the US yesterday, we had Mr. Lacker talking. Now, he was mixed in terms of dovish and hawkish rhetoric. But he did talk up the actual employment market, employment factor of the QE, or should we say rate hike expectations, etc. So he was certainly bullish on employment. Now, in terms of inflation, he did downplay inflation to a large extent. So again, that's helped. That certainly did help the dollar certainly pick up and rally. But given the fact that we had the actual RBA overnight certainly come out very hawkish, and that itself has sent the Aussie and the Kiwi higher to a large extent. But that rally is more towards our Aussie and the RBA as opposed to the dollar itself. Okay, so certainly all eyes on the dollar index, and obviously with regards to Miss Yellen talking. Now, the additional factor as well with regards to the ECB, we've had to talk with regards to additional QE, especially with Mr. Draghi on form this week. Okay. We have the ECB meeting on Thursday, currently Tuesday, so 2 days away, 48 hours away, with regards to actual movement in terms of the Euro USD itself and the jawboning. Now, we did have some jawboning yesterday with regards to the Euro, but it certainly seems to have fizzled away with regards to the credit conditions report this morning. Okay, so the credit conditions certainly had improved, and that certainly weakens the argument for more QE, and that's the reason why we've had a thrust higher on the euro itself. Now, that may well be due to the fact that they want Mr. Draghi may well sidestep and certainly push back in terms of QE expectations on the expectations that Ms. Yellen is obviously going to be hawkish, and thereby that will drive the euro down itself. Okay, so that's certainly going to be interesting. If that's the case, then obviously expectations of additional QE from ECB will send European shares low, which I'll explain why, because they are technically set up to fall. And then obviously jawboning from Miss Yellen obviously will, or attempted a hawkish rhetoric from Miss Yellen, or one of the Fed officials will certainly send the Euro USD lower itself, because the rate hike path for the dollar is certainly higher, regardless of this rally that we've seen thus far. And the economic data that's come out in the last few days certainly has supported that. So economic data today out of the US will certainly go towards shifting expectations, because we do have housing stats, red book data out of the US. Mr. Dudley is due to talk as well. We have had weaker German inflation numbers this morning. That certainly helped the QE rally until it fizzled out post credit conditions report. So again, interesting in terms of fundamentals. thus far. So they are factors that we are certainly considering from a fundamental perspective. Okay, let's look at the markets now from a technical picture. Okay, so first of all, we bring up the chart of the Euro USD because that remains a crucial component in terms of forecasting the movement in the European equities. Now, the daily chart certainly has put in a bullish engulfing after a 3-bar reversal, so that certainly needs to be taken into consideration. The euro itself has bounced off previous resistance equals support on that credit conditions report itself. Now, it looks as if we are putting in a potential inverted head and shoulders formation here from my perspective. You have the left shoulder here, you've got the head, okay, consolidation now potentially before we start to thrust higher. Now, that will obviously be checked by the actual dollar itself lifting. It's the trajectory really for the dollar itself, given the fact that we are holding that key diagonal trend line, is certainly higher. Okay, and that itself coincides with the US markets into a resistance, and that will certainly obviously the risk off factor as well. That's certainly need to consider. With regards to CHF yen, the yen has certainly started to move higher, given the fact that we have no additional QE from the BOJ or no dovish talk thus far. Okay, now these are all factors that we are going to consider, and obviously economic data out of the US is going to dictate as well, not to mention Fed talk. So given the fact that the euro now has a potential bullish setup, and that certainly is bearish for the European equities. Now, given the fact that the euro stock, or shall we say the actual VIX for Euro stocks is certainly into support on a horizontal support on a daily basis, so that's certainly bodes bearish for European indices. The other VIX that I generally tend to observe is the CAC, and that generally tends to give you a good observation. Again, the daily chart is certainly potentially putting in a double bottom formation here. As you can see here, I was looking for an inverted head and shoulders. That hasn't transpired thus far, but we are now back into horizontal support on the CAC in terms of the VIX. We have thrusted higher on the bullish engulfing channel, a bullish engulfing candle. We are consolidating and looking to thrust higher, and that in turn obviously will send the European equities lower, and that's obviously bearish for the Nasdaq as well on US markets. Okay, so certainly consider that going into today's or the remainder of the European session. Now, technically looking at the charts itself, we have the Euro stocks. You can see previous support equals resistance, and that's exactly where we're finding resistance. We currently have a bearish engulfing candle on the day thus far. 60-minute chart, the Euro stocks, as you can see, we have a H&S formation, a bearish engulfing candle triggered at 9 o'clock post the credit conditions report, okay, and that certainly kills the argument for any QE this week, and therefore that obviously sent the euro higher. And down we go in terms of a setup on the Euro stocks. Okay, again, looking at the chart of the German DAX, this confirms the weakness on the Euro stocks. You have a daily chart that's closed a gap, and obviously is languishing post the Volkswagen scandal. You have a H&S formation again. You had the bearish engulfing 9 o'clock post the credit conditions report. Again, kills the argument for QE. We are just making now a right shoulder as we speak. And then we are looking for a potential move lower, which in turn coincides with the Nasdaq into resistance and the US markets into resistance as well. Looking at the CAC now, the CAC 40 itself, looking at a daily chart, the French CAC, you can see after yesterday's topping tail, we've started to reverse, even with regards to obviously the Draghi experiment on Thursday and the news reports that are on the ECB meeting that's going to subsequently come out. We again have a bearish or bear flag formation. The CAC has already triggered its H&S. This is an interesting scenario. So you have the left shoulder here, you have the head, okay, right shoulder, bang, down we go. Okay, so the CAC itself is certainly weak, and we are consolidating on the lower high. The H&S has certainly been triggered. The pivot high is 4745. The neckline is 4680. Looking for a 60-point move, so you're looking at 4620, and that's where we're going. Okay, so you have gap fill below 2, so we've broken out of the bullish channel, and you have gap fill below that needs to close at 4610. Okay, so that's not a coincidence. Okay, certainly bearish from my perspective and my understanding thus far on the French CAC. Okay. Right, so everything is certainly looking as if it's bearish at present. Again, copper itself has been weak, as you can see here. We did thrust higher, we've sold off. The 4-hour chart explains everything. You can see here we're holding previous support equals resistance thus far, and the chart of copper certainly has stopped thrusting higher, and that certainly is bearish from my perspective. Okay, crude oil. Okay, crude oil certainly is languishing at the lows. No real thrust higher, no real movement either. Certainly not a good sign in terms of economic growth going forward, and obviously the actual assessment of risk, etc. Now the Chinese markets certainly have retraced 50 to 61%, now are into potential resistance after closing that gap, and therefore looking for a potential thrust lower and certainly looking weak. The Nikkei itself, again languishing, as you can see here, horizontal resistance has held, and certainly trading sideways. Obviously lack of QE from BOJ certainly does not bode well. So all the factors, all in all, certainly are indicating a move lower. Now the last chart we look at is the FTSE 100. Looking at a daily chart, you can see that we have held that resistance zone there, given the fact that the dollar itself is into support. The weekly chart certainly is holding well thus far, that fib 61% and that diagonal trendline resistance. Looking at the 60-minute chart, you can clearly see that we have a bearish engulfing candle again that started and commenced at 9 AM, even with regards to stronger Chinese data, etc. That's certainly a struggle. Chinese markets are higher overnight, with the Shanghai up 1%. Certainly has not saved the FTSE from falling, given the fact that the dollar obviously is into support, and the mining stocks certainly and oil stocks certainly are feeling the pressure at present, especially with drug maker Shire yesterday as well. That was an additional bearish factor. And the FTSE itself still making a lower high in the 60-minute chart and certainly showing no signs of any real thrust or movement higher. Okay, the FTSE itself now on the 10-minute chart, you can see that the HNS formation has been completed at the 6320 level. That's one of the reasons why I was actually long. I have subsequently closed my my long position because I'm expecting weakness now going into the US session. Okay, so given the fact that we have this fib retracement now 50% to 38 to 61 for the FTSE, and looking for additional weakness there, taking the pivot high in the FTSE, connecting it to the next pivot high, you are looking at the 200 MA, potentially 6350 zone as acting as potential resistance for the FTSE itself. So keep an eye out for that. Okay, with regards to that, folks, lower lows and lower highs. Okay, so I think that's a wrap in terms of the European market update. Again, it's all about the HNS formation on the Euro stocks, given the fact that post-credit conditions report, the argument for additional QE certainly is weakened and the Euro is certainly thrusting higher. Again, Yen will be the wild card. We do have US economic data as well coming out shortly, so all eyes on that, and keep an eye on the movement on the Euro USD as well. I think that's a wrap. Be sure to visit cfds.com for your additional trading needs. Goodbye now.